All right. What's up, everyone? Thank you guys all for tuning in. So this is going to be a live broadcast, and we've got a bunch of folks that are already tuned in. So thank you to everyone tuning in live. Those that are watching this days later, weeks later, months later, years later, whatever the case is, thank you for tuning in. You're welcome to post comments down below. I do respond to every comment posted on the channel, so you please should feel free to ask questions if I can help in any way, clarify anything that I'm talking about today. Today's topic is entries and exits for momentum day trading. This was by popular demand, so I put out a survey and asked what you'd like me to teach a class on. Right now we've got a number of classes that I'm scheduling for this month. This is our anniversary month of when I began providing educational content. We've got almost 10 million views on the most popular video. So we've got some exciting things we're doing this month, and this video is one of the first. So thank you guys for tuning in. To get things off to a great start, I'm going to donate $1 for every person that hits the thumbs up during this live broadcast. And I will donate $2 for every person that shares during this live broadcast. And I will continue to donate for people watching later up to $25,000. So I'll be donating $25,000 to charity. Some of that will be today, and the rest will be spread out over the coming months and weeks and months, I suppose, as long as it takes to get up to $25,000. So thank you guys. If you want to donate today, you can donate through me by hitting the thumbs up. It's that easy. And I also want to let you guys know that during this class, this is a mini class. This is an excerpt from the curriculum that I teach for subscribers over at Warrior Trading. So during this mini class, I'm going to be showing you a bunch of live trading archives. So these are examples of me trading with real money. You can see my order entry window. You can see everything. And if you want to download a few of these live trading archives so you can watch them on your own time, replay them, watch them again and again, I'm going to give you a link where you can do that. So let's see. I have... and actually what we'll do is we'll pin it to the top of the comments for those watching this later. So you guys can see that link real quick, and we'll also put it at the top of the comments for the live chat. All right, so right here on this page, if you click on this page, you will get a copy of Live Trading Archives. All right, you'll get a copy of my small account strategy worksheet, a copy of the micro pullback lesson, strategy lesson PDF, and you'll also get my pre-trading checklist and a special video on holding losers too long and selling winners too soon, which is something that many traders struggle with. All right, so with that said, why don't we go ahead and jump into today's topic, which is entries and exits for momentum trading. I'm going to go to full screen. And I've got my drawing tool, and yes, it's working. All right, so we'll add some graphics here, make this look nice and pretty, and let's go ahead and jump in. I'm going to go full screen. Let's see, and I'll remind folks who perhaps don't already know that trading is risky. I want to make sure I put my disclaimer out there. Trading is risky. Most beginner traders do lose money, and my results are not typical. Having said that, it's important that you know the person that you're learning from is qualified, and I am. I will show you, let's see, where's my trader view? I think I had it up here. Looks like maybe I closed it. I have over $11 million in gross profit trading a momentum day trading strategy that I'll be sharing a little bit with you today, just as it pertains to entries and exits. So I do think that I'm very qualified to be speaking on this topic. So if you're out there wondering, well, you know, is this even real money? You can come over to my website, warriortrading.com, and you'll see my broker statements on the footer of the website. All right, so with that said, let me go ahead and jump back in here. All right, so, and back to full screen. So high level, before we start talking in detail about entries and exits, I want to talk about the momentum checklist. This is pretty important because the problem that a lot of beginner traders have is trading the wrong types of stocks. And when you trade the wrong types of stocks, you invariably end up catching yourself with big losers, small winners, and chasing setups because they don't resolve the way you would expect them to. So what is the criteria, or what is the checklist for momentum? Well, so for momentum, you can trade all day long. I wouldn't say that you can only trade in the morning or you can only trade in the afternoon. You can trade momentum at any time of the day. However, I've always found that the first 2 hours are the best. And that's, it used to be from 9:30 until about 11:30. And more so, it's starting pre-market. So from 7:38 until 10:30, 11. 11:30 is still a pretty good cutoff. But pre-market, I'm trading 8:30, 9 a.m. before the market even opens. Now, if you're not sure how to trade before the market opens, I have a separate video where I talk specifically about that. So don't worry, I can answer that question for you separately. But generally speaking, I would say the best time of day to be trading aggressively is early. Earlier is better, all right? So now what type of stock do you want to be trading? If you're focusing on momentum and you're looking for stocks that have the percentage or the potential to make big percentage gains, you're going to be looking for lower float stocks. So one of the things that I found in my career is that you're never going to capture the entire move. If a stock goes up, 50%, you're never going to capture the full 50%. You'll capture a small piece of that. So if a stock is only going up 4 or 5%, a small piece of 4 or 5%, even if you're using leverage, even if you're trading with options, isn't significant. You're not going to be able to make good money. So I think you want to look for stocks that have the potential to go up at least 10 to 20%, but really with a target of 50, 75, 100% or more. So I'm going to pose the question to you. How does a stock go up 100% in one day? What, in maybe the past when you've seen that happen, what has been the context around it? What's been the story around that stock? How has that been possible? If you think of VWAP, the special acquisition company that was slated or is slated to acquire Trump Media, True Social, that went from $10 to $175 in 2 days. Was that the type of stock I would like trading? Absolutely, definitely, and I did trade it. That had a catalyst, and it had a relatively low float. The float was 28 million shares. So there were only 28 million shares available to trade. That's certainly under the 50 million cutoff. And combined with a really strong catalyst, there was a huge imbalance between supply and demand. And that in turn resulted in very high relative volume. So relative volume, this is simply, relative volume right here. This is simply the volume today versus what is average for a stock over the last 14 days. So if a stock over the last 14 days has been trading on average with 100,000 shares a day, and today is trading 150,000 shares, its volume, relative volume is 1.5. 200,000 shares would be a relative volume of 2, right? So, and it goes on, so on and so forth. I focus on stocks with at least 2 times relative volume. I prefer 5 times relative volume. All right, so a stock will have 5 times relative volume if it's already up 20, 30%, has a great catalyst. That's almost always going to be the case. Ideally, for a strong momentum chart, momentum stock, we want to see a good daily chart. The daily chart should be above the 9 EMA. We also would like to see it above the 200 EMA, but if it's below the 200 EMA, we'd like to see that it has a lot of room to come up to the 200 EMA before it hits resistance there. Again, not trying to get into a ton of technical analysis here in this episode. I have another episode that you guys can check out on the 4 indicators that every trader should be using, so can point you in that direction. I'll put some links to these videos in the description. So requirements, stock should have a catalyst or be a former runner, which is a former momentum stock. Price range between $1.50 and $20, but this is applicable on all price ranges. DWAC went all the way up to $175 a share, so it's certainly possible that you could trade a higher price stock trading momentum, but the risk is going to be a little bit higher. So how do we find these types of stocks to trade? I find these types of stocks to trade every single day using scanners. So I use stock scanners to search the market, and I have a couple right over here that I can show you. So this is the software that I use right here. So I can go scanners and do large cap. I can go to small cap, top gappers. So these are the top gappers today in the entire US equities market. If I go to scanners, I go to high day momentum. These are stocks that are moving up right now in real time. So this is how I find stocks to trade. And then once I've found a stock that I think is a good candidate because it's got high relative volume, it's up enough, it's got a good float, the price is okay, the daily chart looks good, then it's time to take the trade. All right, so this gets into entries and exits. Entry is based on a chart pattern, generally speaking. Now, you probably already understood that, and I'll go split screen so you can see those charts a little bit better. So a chart pattern is basically, it's a pattern that you are familiar with, that you know consistently gives you winners. Okay, so these are just 4 examples of chart patterns. In each of these patterns, there is an apex, which is the entry point, the price to be a buyer. All right, so in the case of right here, this first example where we've got this sell-off, the entry is the first candle to make a new high right here. So if you've got 5, 10 plus red candles in a row, your entry is the first candle to make a new high. And now some people will have some questions about that for clarification. So let's look, I'm gonna go full screen here. All right, so this right here, as you can see, is a bull flag. All right, so this stock has squeezed up right here. It's squeezed up, 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 and then it's experienced a little bit of pullback. We've got one red candle and we've got a second red candle. So during this pullback, this is where I might be looking at the stock and saying, I think I want to buy this. Now, an aggressive trader may trade during this ramp up right here. We don't know what time frame this is. We could say this is a 1-minute time frame, and if it is, then you know that right around here was a micro pullback, right around there. Because you can see how this candle was a high and this one opened a little lower, which means it popped up, it pulled back just for a second and gave you a micro pullback. So you can see micro pullbacks on this little instance right here. So it moves higher, it pulls back just for a second, and then it continues. All right, sometimes it looks like this and sometimes it looks like that. So a micro pullback is a totally valid entry. Now in this case, that would be aggressive. And so what would be a bit of a more conservative entry would be waiting for the pullback to occur and then buying the first candle to make a new high. Now notice I have this dotted, this little sort of dotted line here. As soon as this green candle breaks the high of this previous red candle, I'm a buyer. Now, if this candle, let's say the high of this candle is $5, the high of that red candle is $5. When this starts coming up, if I see green on the tape, which is right next to our level 2 window, if I see green on the tape at 495, 496, 497, 498, I may go ahead, and I likely will go ahead and buy to anticipate the break through this level. Sometimes I'll take a starter 5 cents or even 10 cents early, and then I will add as it approaches and comes through that level. I'm then looking for continuation and resolution of the pattern, which in this case is through the high of day. If I'm feeling aggressive, I can go ahead and add again as it breaks through high of day. And then as we squeeze up here, I make the decision of either taking profit off the table, or if let's say right up here is, let's just say this is $6, I may say I'm going to go ahead and add for the break of 6 because this is parabolic. It's moving so quickly that I have the opportunity to keep adding because this could go higher. And that type of decision would be based on the quality of the daily chart, the quality of the catalyst, and the flow to the stock. So when we're looking at these patterns, these are just examples of patterns, and there's literally hundreds of different patterns that you could choose to trade. One of the things that's going to be important for a beginner trader is making a decision about which patterns you want to focus on, right? I mean, ultimately, that's an important component of your strategy. So as part of creating a strategy, for reference, so on this page here, this has a PDF of my micro pullback strategy. So the micro pullback strategy is what we've got going on right here. That's a micro pullback. It pops up, it pulls back for a second, and it continues. It doesn't even form a full pullback like what we got right here or like what we saw right here. These are both stocks trending up. This is a stock trending down, and then it's a reversal trade. All right, so this is a very well-defined pullback. This is a well-defined pullback that has a false attempt, pulls back, and then goes higher, and this is a micro pullback. So if you want to learn more about those specific strategies that are around those patterns, then you should check this out. If you already have a strategy that you're sort of trading, but you just feel like your entries aren't dialed in, you're getting in a little too high, you're not selling at quite the right place, you're not fully maximizing on the opportunities of these trades, then when we get into the live trading archives, I think that's going to help you quite a bit. All right, so let's talk about the entry. And by the way, for people that are tuning in maybe a few minutes late to this live broadcast, thank you for tuning in. Make sure you hit the thumbs up. I'm donating $1 for every thumbs up that we get today, up to $25,000. So please hit the thumbs up. You can donate $1 to charity right now today by hitting the thumbs up. And if you share this video, I will donate $2. So if you share this video, you can donate $2. So each one of you right now can donate $3 to charity. All right, and this is for humanitarian causes in Ukraine. All right, so for people that are in Ukraine right now. So make sure you hit the thumbs up and make sure you share this video. Okay, so now let's talk about the entry. All right, so what is the apex point of this pattern? Okay, so back to our little case study right here. The apex point of this pattern, if you're going to take an entry on the bull flag, then the apex point is the first candle to make a new high, which is right here. That's the apex point. Now, some traders would take a high a day break. And if you're taking a high a day break, then your apex point is literally high a day. All right, so this could have two important levels. I would say important levels to watch. This right here, and then this up at this right here, and then this up at the top. All right, depending on which strategy you're focusing on. If you're taking a high day break, you're going at the top. If you're taking first candle to make a new high on the bull flag pullback, then you're entering right there. So what's the apex point of this pattern? Now, if we go back to our previous slide, you'll see that this pattern down here initially was a bull flag. It squeezes up and then it pulls back, and the first candle makes a new high, right? So that's your first entry. First candle makes a new high right there. Max loss is the low of this pullback. It goes up, but it doesn't break through the high. Okay, so this ends up forming a false breakout. However, this is a different pattern. As it continues to consolidate above the low of this pullback, this is what we would call a longer period of consolidation. It is a wedge. We can call it an ABCD pattern. And now we're watching for the price to break this high right here and then go through the high a day. And what we find is that when these stocks continue to trend in these small ranges, that eventually they break. They can break out up or they can break down, right? So there's no guarantee that it's going to break to the upside. But if this is a stock that has a strong catalyst, that has a relatively low float, it's a popular stock, a lot of people are watching it, the price is right, then there's a good chance that it'll break to the upside. Time of day is also a factor, but there's a good chance. So in this case, initially, with your entry down here and your max loss, would this have been a winner? Or would this first trade have been a loser? Well, that depends on how you trade. If you're an aggressive trader using leverage, then there's a very good chance that you would have taken profit off the table as it came up here, or as the first candle closed red and or made a new low versus this pullback. Because this was telling us that it can't get through the high on this first attempt, right? It's pulling back. All right, so this should have been a winning trade. But if you had a very small position, maybe you'd say, well, it wasn't up enough to be a winner. It didn't hit my stop, so I'm still holding. It pulls back almost all the way back to your stop, but then it comes back up. And then on this attempt, as it breaks through the high, this is where you would look to maybe take some profit off the table. But a more aggressive trader could take 2, 3, or 4 trades in this area. Your first trade is right here. Your second trade is right here. And then you've got another trade on an ad for the break through the highs. So you can be very active if you'd like to, or you could be less active. So you have to first figure out what is the apex point of the pattern. And if you don't know the apex point of the pattern, it's because of the definition of apex. The other way of saying it is, what is the point that needs to break for this pattern to be resolving? All right. If you don't know what that price is, you need to get a better understanding of the pattern that you're trading. Then a question is, what is the proximity of the nearest half or whole dollar relative to the apex point? This is important because we have psychological resistance around half and whole dollars. So as stocks are approaching these levels, it's very common that we find resistance. So back to our little chart here. So in the first example, I think I said this was like $4.98, right? So $4.98, or that was $5. So I'd be a buyer as it's approaching that critical level of $4.98 for the break of 5. I might be buying at $4.95, $4.96, might even be buying at $4.85, depending on how much it pulled back and what the level 2 looks like. Now, level 2 in time and sales, I'm going to show you when we get into the live trading archives in just a few minutes of this episode. But if this right here, this high a day was at 550, then your high a day is right at psychological resistance. And there's a higher likelihood that we're going to come up and we're going to double top against that level because it's psychological resistance. Then we need to pull back, hold over 5, psychological support, and then come up for a second attempt through 5. So this is something that we're going to struggle with a lot around half dollars and whole dollars. Stocks that are really, really strong, sometimes they can just break right through those levels, which is phenomenal when they do. But more often than not, a stock is going to run into a little bit of resistance. So if the apex point of your chart or of your pattern, for instance, is like 495, that presents a problem because the apex, the breakout spot, is just below a psychological resistance of a wall. We'd rather have an apex point be right at it or just above it. So when it has that burst of volume coming into the breakout, it's enough to carry it clear through that level. When it has that burst of volume, but then it runs right into sort of a ceiling, that's when you can have a false breakout. So what is the apex point of the pattern? What's the proximity of the nearest half dollar and whole dollar relative to the apex point? And what is the max loss of the pattern? So the max loss, generally speaking, is going to be the low of this pullback right here. So this is your max loss. So if you're entering, and it's the bottom of that wick. So if you're entering and the high here is $5, but this is $4.25, that's a 75-cent max loss. That's going to be too much risk, most likely. It doesn't mean you can't take the trade. You could still take the trade, and you could take the approach of saying, you know what, I'm going to buy it at $4.95, but I'm not going to hold it all the way down to $4.25. I'm just going to set an arbitrary stop on this at $4.75. So, I'll risk 20 cents, and it might drop down to $4.75 and then come up for a second attempt at 5, and the chart will look like it was never a bad chart. Why did you stop out? Well, it's because I got in with a little too much size near the highs. I couldn't afford to hold through the whole pullback. Different traders will have different points of view on this. Because I try to leverage my account, which is to say I take as big of a position as I can possibly take for a lot of setups, then I'm not going to be in a position to hold through a really big drawdown. If you're going to hold down 75 cents based on 2-to-1 profit loss ratio, you should have the potential to make $1.50. So I'd rather hold down 15 cents with the potential to make 30 cents. 30 cents, especially on a $3, $4 stock, is much more obtainable than 50, 75 cents or $1 a share. So, again, that's your discretion. Do as you'd like. Use either a tight stop and know that sometimes you get stopped out and then it'll end up ripping. But of course, the best setups work right away. The best setups don't falter. They just go right through that level. So if it doesn't work right away, well, that's probably okay. You can always get back in if you really want to. Or you can use a looser stop, but then you're going to have to use smaller share size and the profit loss ratio still might not make sense. So the max loss of the pattern, and then enter the position, then this is what I do. If there's high relative volume and green on the tape as it approaches the apex point. So high relative volume, again, the term that we talked about already, that's versus the relative volume over the last 14 days. We want to see it at least 2 times, but preferably 5 times or higher. And just for reference today, the stocks that were on the scanner, So this one, leading gapper, relative volume 710. SPI relative volume 22, Acer relative volume 310. I mean, these are all, except for this one, they're almost all far in excess of the 2 to 5. So usually that's not going to be hard. But sometimes you might have a stock that just pops up on one of your scanners in the middle of the day, and it might have lower relative volume. I mean, all of these are in this column here are still pretty high. This is 3.46, but this one's 0.42. Right? So that might be one where we say, you know what, the relative volume is too low. I can't justify a trade on it. And generally, if you looked at that stock, what you would find is that it doesn't have news. So we don't really know exactly why, it's popping up 5 or 10%. It could be, I don't know, some large trader or hedge fund or mutual fund decide to take a position. There's a million reasons, but the likelihood that it's going to continue intraday to become, a 100% move without a catalyst is sort of unusual. So then we've got our entry order types. Okay, so if we're actually executing your entry. So we're going to use, I'm going to use hotkeys generally, but you can use an order entry window if you'd prefer. It's up to you. And you'll see in the live trading archives examples of me using both. So I'll show you that. We're going to get into those examples in just a moment, and that'll be a little easier to explain, but I just wanted to make sure I kind of covered the basis here with this first. So using hotkeys or the order entry window, my order type is a marketable limit order. So a marketable limit order, that's a limit order where you're saying, okay, the ask on this stock here, right now is, let's say the spread is $4.95 by $5. So I'm going to put my buy order on this at $5.15, and I'm going to press the buy button. And the second I press the buy button, I'm going to start buying shares at the current price of whatever it is, $4.98, $4.99. I will keep getting filled my position, but I won't fill anything higher than the high of my limit order. So in the case of that example, it'd be $5.15. I do that because, and I always buy on the ask. I don't buy on the bid. I buy on the ask because if a stock is strong, I will not have the opportunity to get filled on the bid. If it's really strong, it's moving quickly right now, I won't fill on the bid. So breakout traders always buy the ask. And then we also will try to take profit on the ask. We'll talk about that in just a second. So as soon as I get in trade, sometimes people say, Ross, how do you manage your risk? Do you set a stop order? How do you do this? So I do not use live stop orders, and I never have. The reason is because if you use live stop orders, if you put a stop order out, let's say you buy 25,000 shares of this stock that we were just talking about. Let's say you buy 25,000 shares of this stock at $5, and you put a stop order at $4.75. It's a live stop order. Remember that broker dealers can see your stop order, and they can stop hunt. Stop hunting is when the market makers, and a sell order goes through, they clear the book, it drops down, and as it sweeps down, every order that goes through below someone's stop will make those orders execute as market sell orders. The orders fill, the stock drops, and then immediately fills back in. So you get these flash drops, which are these candle wicks, and then it fills right back in. That's stop hunting. It's called stop hunting. And I never want to subject an order to get picked up by stop hunting market makers. So I don't put out live stop orders. Now, pre-market, you can't put out stop orders anyways. So prior to 9:30, stop orders aren't allowed. So it doesn't really matter for pre-market, and for regular hours, even though I could do it, I don't do it. So mental stop only, which means I need a button on my keyboard that I can press. And when I press it, my order will sell at the bid to bail out. It's basically a panic sell button. I don't want to have to panic sell if I can help it, but I have that button on my keyboard just in case. All right, so that's a hotkey. So now let's talk about the exit. If this is a leverage position, all right, so a leverage position would be where you're using leverage or where you basically have, a huge position in the stock. I'm probably going to want to take a little profit through the breakout. My highest risk is from the moment I am in with full size until I've taken some off the table. So I'm going to be inclined to take some off the table. And then I can look for continuation to add back to my position. And this starts getting into very active trading, which is what I do when we've got parabolic momentum. For just base hit stuff, I may not add back. I may just get in and then take profit through the breakout. If it's a smaller position, you can hold through the breakout and then look for continuation to the next resistance level, which is fine. It just depends on your account size and how aggressive you are in your strategy. So depending on my cost basis and share size, if I see red on the tape, large sell orders, or a red candle on the 1 minute and certainly on the 5 minute, that may cause me to go ahead and bail. All right, so, and if I did that, I'd be trying to sell on the ask, but if I can't get filled, then I'll hit the bid. However, using my hotkeys, I sell into strength and I avoid hitting the bid at all costs because it feeds weakness and it will hurt my existing position. So if I'm holding 25,000 shares and then I hit the bid for 12,500 shares, it's going to show as red on the tape, right? And what that red signals to other traders is weakness. When I see red like that, I interpret weakness. I never want to hurt a position that I'm still holding. And so I'm always going to try to sell into strength. Now, a lot of beginner traders out there, certainly Robinhood traders, traders that are on their mobile phone, they might just do market order entry, market order exits. Market order entries will be green on the tape because they're a buy order. Market order exits will be red on the tape. And if you hit a market order exit with a large position, which we sometimes see on some of these meme stocks, it can cause these momentary flash drops as the market makers clear the book, the fills, stop hunting maybe perhaps as well, and then it fills back in. So that's something you have to be careful of. It is more common on certain types of stocks, especially meme stocks, where you have multi-day hold traders that are holding positions from days or weeks previous that the stock has been trending. Using hotkeys, I can also set profit target orders. So I can set an order to take a quarter of my position off the table, up 15 cents or 25 cents. I mean, all of these hotkeys you can configure however you'd like. I will do that in certain instances, not all the time. I'm more likely, as it's going up, just to put out my order at that moment to take profit at the ask. You can also use offsets above for profit or below if you've got a stock with a big spread, which is fine. But if you have a tighter spread stock, you wouldn't want to do that probably. Stop the rest at average cost. All right, so stop it, which is break even. If it's a false breakout, I'll still try to get out on the ask if I can, but I'll hit the bid as a last resort. Okay, so I went through that fairly quickly. But let's go ahead and look at some live examples and see if this helps add a little bit more context to those descriptions. All right, so hang on one second. I gotta log in here. And by the way, those just getting tuned in case you didn't already know, I am donating $1 for every thumbs up we get during this video for humanitarian causes in Ukraine. And I'll be donating $2 for every share that this video gets. So I would love for you guys to share, hit the thumbs up and share this broadcast. All right, so let's see. Okay, so this is gonna be the first one we look at. And so this is one of the live trading archives. One of the live trading archives that I've included in this bundle of free downloads that we're going to give you guys is from a day where I made $132,000. So you can check that out. That's a pretty cool one. All right, so let's look at this here. All right, so first we're going to get oriented. So let's look at our chart pattern. Okay, so our chart pattern's right up here. All right, so we have a stock that has made a big move. The ticker is ABIO. The percentage gain on the day is 210%. Okay, this is a big percentage gain. Let's see. Let me check. The float on ABIO today is 14 million shares. On this particular day, it may have been lower. I'm not sure. But in any case, so we've got this move up. It's about 10:30 a.m. We have a red candle at the top, a second candle pullback. This candle has formed. What you'll notice is that I have already drawn a line at 1251. Note that 1250 is psychological resistance because it's a $0.50. If we look at the 1 minute chart, you will see that it pulled back quickly, came back up and was under 1250, couldn't break, did one of those flash crash kind of drops, came back up, went sideways, tried to break 1250 again, couldn't do it, came back down, double bottom off of 1160. Now, if you're a dip trader, you could certainly look for a double bottom off of 1160 as one of your entries. That's an entry that I would consider to be riskier. And since a lot of you are probably beginner traders, and feel free to comment below with how long you've been trading, just out of curiosity. Since my guess is many of you are beginner traders, I would say that dip trading is not the place to start. While you might think, well, you could get a better entry buying on a dip, that's true, but it requires a high degree of intuition about whether or not the stock is dipping and is going to keep going higher, or has reversed and is going to keep going lower. So that educated intuition takes a lot of experience. So I would start by focusing on breakout trades. Breakout trades are where you're going to have high volume. It's where you're going to have breakout or bailout, instant resolution. When they work right away. When they don't work, they don't work. There's no guessing. And you're not going to be too much in the habit of buying stocks that are selling off. So thanks for chiming in there on how long you guys have been trading. So a lot of you are fairly new, so I would be very cautious about buying dips. Okay, so on this one, let's see. So this is our chart pattern. So I'm gonna go ahead and press the play button. And this, if you don't know what this window is, this is a level 2 window. I have other videos on how to read level 2, how to use level 2. So I have content around that if you're interested. This is our order entry window right here. Okay, so this is my order entry window, and I have this same setup for 4 different stocks. 1, 2, 3, 4. And then I have the chart in focus for the one stock that I'm trading. Okay, so in the case of this stock, I already have an order prepared at 1252. That's the price for 2,000 shares. And I have my mouse on the buy button. I am ready to click the buy button, and you see there's some green on the tape right there. So when I'm talking about the tape, this is what I'm talking about, this section right here. Those are the transactions that are actually going through the market. There's more green on the tape there at 40. So the question on this is, will I get in a little early to try to anticipate the break through 1250? Hands on, there we go. So hand was on the buy button right there. Now, 2,000 shares, as many of you know, for me, is a starter position. So this is a trade where I took a starter position at 1220 and 1225. Now, I didn't really care whether it was 20 or 25. My order was still 1252, but I clicked the buy button twice. And in the same second, I filled 5 cents apart. My orders filled actually between the spread. So this first entry is not one that, as a beginner trader, you would have had the confidence most likely to take. Your entry is going to be 1250. Now you pay a higher price for confirmation, but you avoid the risk of false breakout. At least the fact, like right here, if this drops back down to 1160, you'd look back at the chart and you'd be like, why did you even buy it? You didn't get the first candle to make a new high. So now up here, I have added at 37 and 40. So initial starter was at 20. Now adding as we're approaching this breakout level, 1250. Now we see on the level 2 a 15,000 share seller at 1242. New order, I've moved up to 1261. That seller is starting to get bought up. See, it went from 15 to 10 to 7. 7,000 shares on the ask. And then it pulls back again. This is a chart that I would say is multi-time frame alignment. That means both our 1 minute and our 5 minute are giving us the same message. Now there's a little bit of a red flag on the 5 minute chart, and that is that the high a day volume the highest candle was a red doji, which is a reversal indicator, and that it's on fairly high volume. Aside from that, it's a pretty good 5-minute chart for a first candle to make a new high. It's also just a little extended off its 9 moving average, which is this gray line. So it's not perfect, but it's pretty good. The 1 minute is fine, and the level that we need to see break is 1250. So that right there is what we look for. That's called resolution. That's the breakout. Now, one of the problems is if you waited for the break of 1250, in this case, you might have missed it, right? So I now have 10,000 shares at an average price of $12.32, and I'm up $3,321. You can see my open P&L right here. And this is a spot right here where I could take half off the table if I wanted to. Alternatively, I could add, because we're still just opening up. Confirmation is just started, and we still have a target of $13. And I don't remember what I do, so we'll both find out. But let's just rewind that for like 3 seconds. So where was the indicator that this was going to break? Well, if you were looking at the chart for your indicator, it happens, you don't really see it on the chart. It just breaks through this level. So on the chart, you would probably say, well, based on the chart pattern, the entry is 1251, but of course it'll break quickly because that's the apex point. So I'll probably want to get in this around maybe 1245, 1248, just a little bit under that level to catch that break through that level. Now let's just step back for 1 second and talk about trader psychology. So we want to think about the inverse position. What if you were short this stock? What if you shorted this stock maybe around 1240? One of the times it came up to 1250 and then reversed off that level, because we know that there was psychological resistance at 1250. So you're short at 1240. It drops down to 12. Maybe you add short. It flushes down to 1160. It looks like it's going to roll over and it's done. You've got that red high a day doji, so makes sense. But then it starts curling back up. Where do you cover that position? Well, your stop is 1250 because that's the pivot. But alternatively, you're certainly covering at high of day, which is 13. Now, of course, some short sellers would say, I'm going to keep adding at 1250 and 13. And if it goes to 14, I'll add more. And if it goes to 15, I'll add more. And if it goes to $25, I'll add more. But that's also how those short sellers blow up accounts. So everyone has to manage risk, whether you're long or short. So 1250, because that's a place where a short seller will likely cover, you should see short covering to help propel the stock through that level. That's what you want to see. All right, so at 1250, at 1245, 1246, 1247, 1248, you're going to have some short sellers who start to cover a little early so they don't get as much slippage on the breakout. This is the exact same as what I do when I'm selling a stock at 1205 before catching the break of 12 and then slippage down to 1160 at the bottom of a bottoming tail, right? So it's anticipating what's going to happen. So as a long trader, you can capitalize on that by getting in as you're seeing green on the tape to anticipate the squeeze through that level. You're also going to have some traders who use buy stop orders. So a buy stop order is an order that will trigger when a stock crosses a certain price. So that may be something that someone would use if they're taking more of a 5-minute long trade, probably with smaller share size for a longer hold time. If they put that order at 1250, it's going to execute market long as soon as it breaks 1250. So let's go back to this example here. So let's, again, reorient ourselves. So we've got 1242 on the ask. We've got green on the tape. And right there, all of a sudden, look at this green. Now we're at 1250. And with all of that green, it's going to propel it through this level and it's going to snap immediately to 76, 75. And I put the order out right there to take half off the table. Okay, so I took half off the table selling into strength. I'm going to be happy to add back to this position. But first, I'm taking profit off the table. I'm protecting myself in the event that this becomes a false breakout, where it goes, 1266 and then immediately reverses. So I'm, taking a little profit off the table, which is the right decision. So sort of adding a little cushion. And then the high was 1280. I've got another order here at 1266 to sell the ask. It's not selling. This has to hold over what level? Well, psychological resistance was 1250, so it can come back and retest 1250. And if you're aggressive, you could buy a dip off of 1250 or 1255 with a stop at 1248, right? Because again, you're setting your stop right underneath psychological support. And this just came down and it held that level. So now, is it going to break through 1284? Let's see. So let's back this up again. Let's watch the whole thing. All right, so we're coming up. We break through 1250. We go 1270, 1277. And I take a little bit off the table at 69. Now we've got 1274. I put an order, sell half, it doesn't fill. And see how I place an order at the ask and then cancel it and place a new one. If my order doesn't fill, I have to cancel it and place a new one, but I'd rather sell on the ask than sell on the bid. And look at that. There we go. Okay, now this, in this instance, look at that. I just added at 1307. Now we're looking for a squeeze up to 1350. Look at how fast that trade was. Let's back this up. So this would have been a perfect example of a dip off of 1250 right down here, 1253, 1258. This would have been a great place to buy with a stop at 1248. And that's totally fine. So this is what we would call right here. This is a 1 minute micro pullback. So on the 5 minute, this is a 5 minute bull flag. We have resolution. And this on the 1 minute, we would call the first pullback following the 5 minute breakout, or we would call it a 1 minute micro pullback following a 5 minute breakout. So we popped up. I was already in from before, but if you weren't already in, right? Get in the mind of someone who's not already in. If you're not already in, where would you buy? Well, you'd let it pull back and then you'd buy the break over this candle and your target would be a squeeze through the high. What if you're still short? What if you haven't covered yet? Where would you cover? As it breaks through this level, because you don't want to be holding as it squeezes through the high, could go into a halt up. All right, so let's watch this again. We'll back this up. So the entry again on this one, my entry was a little bit early on a sort of a dip. So this wasn't the best example for a beginner entry because I was adding at 1225, sort of mid-range with a stop just under $12. But then I added at 1235. But right here, as this comes up, so you could have certainly added right here at 1240. And does it break? Not quite. Okay, that's okay. So you still have your stop, most likely at 12. When you get in a little higher, you've got a bigger stop. And then you watch for the second attempt. So now it's coming, let's see, 35, 46, 36, 37, 49. And this is the place to be punching that buy button. And now you could take a little off the table if you'd like, or you could even keep adding right in here, depending on how aggressive you want to be. Adding right there at 58 and 60 would be a great dip trade. Stop is at 48. Now we're looking for the breakthrough 85. It breaks 85, goes right to 97. Now we're looking for the pop through 13. There's 98 on the ask, pops up. There's 1308. There's 1324. I got an exit 4,000 shares at 1324. Okay, so this was just one example. Now, for reference, again, this is what I do for members at Warrior Trading. We've got I need more examples I could possibly count. Our slide deck is over 1,000 slides, and it's all strategy development. Because there's more than one pattern. This is just one pattern, and this is just one example of that pattern. But I'll show you a couple more today. All right, so now let's look at this one, which is called, let's see. Again, those of you guys who haven't already downloaded or signed up here for this download, make sure you do that. You'll get a copy of my MicroStrategy lesson PDF, a copy of my small account strategy worksheet, some more live trading orders, just like live trading archives, just like the one I just showed you, my pre-trading checklist, and a special video on holding losers too long. All right. Okay, so here's another one. All right, so this one, this is a micro pullback. Okay, so, and yes, thank you for those who are hitting the thumbs up. I really appreciate it. Again, donating $1 for every thumbs up and donating $2 today for every time the video is shared. So right here, this stock, WAFU, it's up 349%. It just squeezed up through the volume weighted average price. That's a technical indicator. Again, if you're not familiar with those indicators, I've got other videos where I talk about them. So now we're on a 1 minute micro pullback following the break of VWAP. Okay, the high is, looks like around 1012 or so. I'm holding 333 shares at the beginning of this video. And watching, hand is on the buy button. So again, getting oriented. We've got our level 2. We've got some green on the tape. Order entries ready for $10.30. Share size 1,500 shares. Hands on the buy button. Are we going to hold $10 psychological support? Actually, it looks like the high right here was a little higher, maybe around $10.20. And one of the things here is that this candle closed red. So let's look at our volume profile. High volume green candles, light volume red candle. Now we're looking for first candle to make a new high, high volume. So for those that are curious, like what's the benefit of being a member at Warrior Trading? One of the benefits is the live market commentary while I'm trading. Because I've been doing this for so long, I can keep all of these things in my focus at the same time. Volume profile, position relative to technical indicators, position relative to high of day, the candle of the high of day volume, the daily chart. This is a lot of stuff to keep organized at the same time, and this moves quick. So it really helps to have, first base coach kind of saying, this is what I'm looking at here. And it's not just first base coach. I mean, I'm actually running around the bases here doing the trades. Okay, so let's back that up. So this was an entry exactly, the first candle making a new high. See the green on the tape right here at 14? Boom, boom. That's where I'm pressing the buy button. Now, I just bought as it squeezed up here, 6,000 shares, okay? This candle has just started to make a new high, and now we're looking for a squeeze through the high right there. Target is 1250. My cost basis is $10.14. Okay, so let's watch this. There's green, and look at how fast that resolves up to 1049. Now, I will say that this doesn't have perfect multi-time frame alignment. The 5-minute chart's not perfect. The 5-minute chart's, in fact, a bit extended with this entry up here, but this is a 1-minute pullback following a fresh break of VWAP, and this is where short sellers will start to get squeezed out, who were holding short for an all-day sell-off. Because now, all of a sudden, this thing's back above VWAP, and it's looking strong for a move up to 1239. So let's see how high it wants to go. To manage risk, I take a little off the table into that squeeze, right? So took a little off the table there. New orders ready to add back. The high of this candle's around 1060. Added back right there at 1055. I took profit and then I added back on that micro pullback at 1055. Now looking for 65, 75, and 85. The red to green is at $11. $11 right here is today's open. So there's 75. Now I'm holding 6,000 shares at a 42 average. And I just added right there for the breakthrough 11. Taking a little profit off the table as we squeeze through the psychological resistance of $11. Now 11 is holding as support. I may want to consider buying a dip right here. Okay, 11 broke. Still holding a 1052 average. Putting my order at 1150. And added right there, 1099 average. 7,000 shares long. Profit at 1125. Look at how fast this is moving. Now, these are bordering on quick breakout trades, right around psychological levels of support and resistance. Bought the dip right there at 1113. So that was a dip trade. It should break over 25 real quick. We don't want it to break below 11. And I stopped out there for a small loss as it came back down to 11. So, again, this was the first setup. And within that, I took 3 trades. Was it 3 or maybe 4? So the first trade was the first candle to make a new high. And then I took profit at 55. And then I added back at 55 for the squeeze up to 11. And then it pulled back. And then I added back around 11, whatever it was, for the move up to 11.50. So trading around $0.50, whole dollars. Very aggressive. That's the way I trade it. You don't have to trade it that aggressively. You could trade however you want. You could say, oh, well, I'm just going to buy this, and I'm not going to sell it at 11.50. I'm going to set my target at 12.19, and I'm going to let it work. That's fine too. A smaller position, but a bigger move, it's fine. Just different ways to approach trading. So my exits are entirely with hotkeys by pressing the buttons. Little pause there. That looks like possibly a little internet latency. It's very unlikely that the level 2 actually paused. Let's see. So this is where I got in. There you go. Look at that. Wow. That right there was a clean trade. Let's back that one up. So the first dip didn't work. The second one did. So bought the dip at 11.13. Stop is $11. Now that's the same thing I did before. Remember, I stopped out at 11.01. So I lost like $900. But I got back in. I tried it again. Alternatively, where could you wait to add? Well, let's look at the clock. I haven't even mentioned this yet. The clock. We've got our clock right up here. It's showing 10:22 and 40 seconds. How many seconds do we have left on this 1 minute candle? We've got 20 seconds left. Of course, 60 seconds in a minute. So what we're looking at here is first candle to make a new high. All right, now our high was 11.50. And my suspicion here is that this is gonna break. Look at that. Now this candle's turning green. Now we've got 35. This is a micro pullback, and I'm adding right here at 44 for the breakthrough psychological resistance. Even if you only add there, that's fine as your first trade. You get in at 11.44 for the break of 11.50. And watch 11.50. It paused for a second, then that's 11.72. Now, you want to go real aggressive? Add here at 11.75. Why not? You've got an average of 11.21. Do it. Or take profit, either way, right? If you're aggressive, you're going to add. And sometimes I will and sometimes I won't. In that case, I sold at 11.81. And that was most likely a hotkey mistake. I probably meant to sell half and I accidentally sold the whole thing. And sometimes that happens with hotkeys. You know, you've got a whole set of hotkeys on your keyboard, and in an instance, you press one and then, oops, I pressed the wrong one. And on that trade with 9,000 shares, I left 40 cents on the table, $4,000, just about. So now we're coming up to 11.26. And I realize, oh, shoot, see, my mouse is over here at this, and I'm realizing I filled at 11.81. That's not a good fill, but oh well. So now watching 11.26, the halt level. What if the halt level moves up? There we go. There's 12.52. Now pulling out the chart a little bit more, recognizing, of course, we had that earlier high near $16. So this ended up being a really epic 1 minute pullback following a break of VWAP. And I very actively traded it. I got in, I got out, I got in, I got out. In fact, would I have done better if I just took the trade and held, for the whole move? Sure. But in this case, it went to a high of 11.50 and then it dropped to 10.75. That's a 75-cent pullback. I went from being up $1 a share to being up only like 25 cents, right? That's not great. So what'd this do? Was that the end of the video? Yeah, I guess that was the end of the video, but that's fine. All right, so I got another one. Hey, by the way, if you guys enjoy these kind of videos, if this is helpful for you, this is how I teach for students that are over at Warrior Trading. Generally, the classes are they're a combination of going in and out of a slide deck where I've got a ton of examples. All right, so like this, for instance. So I'm going in and out of this slide deck where I've got all of these examples. This is the slide deck that's like 1,000 slides long. All right, so down here, and then we go into the live trading archives. So one of the goals that I've had for the way I teach is that I try to connect the dots. So there's a clear path in the strategy, like sort of the description of what trading is and what I trade. So I could have just said, okay, guys, entries and exits, buy the first candle to make a new high, and then take profit as it goes higher. Video's over. Hit the thumbs up, and that would have been a less than a minute long video, because simply that's what it is. And that's what a lot of educators do. They just give you the general. Generally speaking, this is what it is. And then they'll show you maybe one or two of their trades. They'll be like, this is what it looks like. You buy here and you sell there. Done. Okay, what I wanted to do, because the feedback that I got from a lot of our students early on was that I just took a class with so-and-so. And the problem is, talked a lot about their trading, showed a lot of patterns, this and that, but there was this huge gap between all of that and like the actual execution. Like, how do I actually execute that strategy? How do I find those stocks in real time? Where do I actually press the buy button and sell button? And so they finish those classes feeling like I'm lost, and I don't want you to feel that way. As always, my legal disclaimer is that I can't guarantee that you're going to find success, and trading is risky. My results are not typical, but I've made a real effort to make this educational experience as thorough as possible. Okay, so let's see. So we got that one. So we've got another one here. This one also a little bit more active trading. Thank you guys who have hit the thumbs up. I appreciate it. And of course, you are making a donation here. So, okay. All right, so let's back this one up. This is a quick video. So here we go. Very similar pattern that we just saw a moment ago, right? I mean, this is the same pattern that you see right here, right? So we're looking at first candle to make a new high. We've got four green candles, a couple candles of pullback, first candle to make a new high. Okay, so what do we have here up on the screen? We've got 4 green candles, 2 red candles, first candle to make a new high. So I'm a buyer at 16.18. This is a cannabis stock. So just added 2,000 shares there at $16.19. Okay, so that's my entry. Now this is already starting to resolve. The high of this candle, right? What's our profit target? Our high is just under 17. Daily chart, it is below the 200. Not great, but it has a lot of room up to the 200. So it's still worth trading. Okay, so there's 1638. Now you'll notice on this one, a little bit stacked up. See how there's a big stack of sellers at 39? See that wall? You can see that on the level 2. There's 40, there's 47, there's 50, there's 60. I took a little off the table there into strength. So this was basically and then there's a 10,000 share bid. That's good to see. So this is a fairly simple first candle to make a new high. Now the add back, that got a little more aggressive. Okay, so let's rewind this. Let's do it again. So why did I buy here at $16.18? It's the first candle to make a new high. What's my max loss? Technically the low of that candle, 1570-ish. But I'd rather set the stop tighter at around $16. So stop is 16, which means on this trade, I'm risking 400 bucks. I'm in at just under 1619, 1620. So right here, I'm up 200 bucks, which is okay because that's a 1-to-1 risk to reward ratio. So there we're coming up to 50. So I'm up $632 on this trade. So we've got 1650 on the ask. There we break it. I add 1650. Why? Psychological resistance. I add for the break through that level. Scott, no, I don't get out with market orders. I always try selling the ask. That's a limit order because I'm choosing the limit price with my hotkey. If I have to hit the bid, that would be a marketable limit order, but just a marketable limit order. All right, so now my average is 1624. I added 1,000 shares. And as soon as it comes up to that level, I put an order to sell half at 1659. All right, so that's a 1 cent offset below the ask. I take a little more profit, scale down to just 375 shares. So about $800 of profit. And then look at this, the level 2. Let's see, let's back that up 1 second. See that 10,000 share order right there? I saw that bid flash up and I thought, you know what I should do? I should buy. Why? Because if I buy here at 1654, 5,000 shares, I can always turn around and sell to 1648, the 10,000 share buyer. So I'm really only risking a couple cents. So I add back right there, 2,000 shares. Average is 51. And there's 1680 on the ask, up another $400. So that trade was based almost entirely on level 2. On the chart, of course, I knew we were on a breakout, maybe a little bit of a dip trade, but really it was a level 2 based entry. Taking a little off the table there at 83, 84. New order goes at 17. Now, can I buy here at 1695, 96, 97 for the breakthrough 17? Let's watch. If we see green on the tape, now we're seeing a little red, so it's pulling back a little bit. Still holding 594 shares at 1650. It flashes down, which is not super pretty. So I glance over at the 1 minute chart and it's okay. I mean, it broke out. It's not perfect. Now we're back down to 1643. And it looks like that was the end of the video. Okay, so I don't know where it goes from there. So I might have lost on the last 600 shares. Didn't break through 17. All right, do you guys want to see one more example or 2 more examples? Let's see. You tell me. Okay. All right, so live trading, ITC. All right, so let's watch this one. All right, so this one, 2 more examples? All right, we'll do 2 more examples. Okay, so this one here, this is a little tricky. Okay, so on this one, I was using my small account. I was doing a small account challenge. So the pivot on this chart is this level right here, the break of that level. And then that sends us higher up towards our previous high a day, which is around 29. So we've got a little bit of double top risk here. And the high of that candle was just under 27. The low, 24.50. Big range. If it can hold this level, then you're looking for a squeeze back up to the high. Now we're looking for a micro pullback right in this area. And then the first candle to make a new high through 27. So let's move this a little bit further forward. So we're pulling back. And let's watch this. Now we're coming back up a little bit more. So see that first candle just made a new high right there. So you could have bought that first candle to make a new high. This was a small account challenge, so I wanted to wait for confirmation and take a quick trade through the highs. So the entry is going to be a little closer to 27. I need more confirmation to trust it. Paying a higher price for that, the winner will probably be a little smaller, but I'm okay with that. So moving my order here up to 26.90, 100 shares, 27, 100 shares. And right here, as we're seeing green, I'm adding 300 shares at 26.78 for the break of 27. So looking for 85 and then 95, a break of 27. Psychological resistance. Okay, so up there at 27, we had a little bit of a seller, 10,000 shares, and it broke right through. No problem. No problem. Okay, now if you want to be aggressive, you could add at 27.25 for the squeeze up to 27.50. New stop 26.99, 20 or 27.05. Set the stop just above this level, depending on how you want to trade it. So now we're looking for 27.50, and then a squeeze up towards 28. New orders at 27.50. Adding there at 40 to anticipate the breakthrough 50. There's 60, there's 70. Now right into that squeeze, it might not have been a bad idea to take half off the table. I'm up almost $1 a share. There's 77. It's stalling out just a little bit. There's 80, there's 90. Can we break 28? On the break of 28, I should probably take a little off the table. Up over $1 a share. So see, I should have taken profit there because it hit 28, it pulled back, now 50 cents to 27.50, and this is where you could start to feel like a little bit of weakness. But I added aggressively and looking for the squeeze through $28, and my guess is that as soon as it breaks 28, I'll take it all off the table right there. Yep. So took it all off the table for $532 of profit. So that was a small account challenge. So that one's not maybe as exciting of a trade, but a good trade. And now let's look at one last one here. Okay. So this is Pixie. This setup is sort of similar to the one we looked at earlier on WAFU, I think it was, which was a break over the volume weighted average price. So this hit a high of 1250. It came up to the VWAP, over it, and then is back below it. The high of day is around 1494. So psychological target up around 1494. Putting my order at 1253 for 1,500 shares. It's ready to go. So that was the first candle to make a new high right there. That was the spot where I could have taken an entry. I didn't. I added a little higher. Well, wait a second. Oh, I'm focusing, it looks like, on a different stock at this moment. All right, so let me go a little further forward. All right, let me back this up. All right, so we've got a double top around 1250. So now I've added there at 1245 for the break of 1250. Looking for the squeeze up to 13. There's 69. 30 on the bid. 77 on the ask. This one you can see has a tendency of popping and then having these topping tails. This is a little bit of churn here. There's more red on the time and sales than I'd really like. So now we're on a 1 minute pullback under 13. New orders at 13. Halt levels 1335. And there you go. There's 1320. Took some off the table at 1318. And there's back to 13. So, you know, the question is, how high does this one end up going? Does it sort of squeeze all the way back up to the high? The video's not too much longer, so I'm not sure how much higher it goes. High was about 1350. There's 1353. You can see on this one a decent amount of red going through the tape. And that's something definitely to be mindful of if you're seeing that. Not sure why, but you know, it seems to be the case, and that's probably an issue. All right, so let me back out of this again. I want to put this back up for those of you guys that want to keep learning. I encourage you definitely to subscribe to the channel and hit the thumbs up. If you hit the thumbs up, of course, we're donating $1 for every thumbs up that we get, up to $25,000. So thank you guys for doing that. And if you want to keep learning, you're welcome to download my micro pullback strategy lesson PDF, small account strategy worksheet, live trading archive, pre-trading checklist, and a video on holding losers too long. What I think I'll do here is maybe just a couple minutes of Q&A and answer questions that a few of you had, and then I will end the broadcast, and we'll see you guys first thing tomorrow morning for the morning show around 8:45. For those that were tuning in maybe just for the first time for this video, I do the morning show every day around 8:30, 9 o'clock. I go live, and then I give you my watch list for the day. So what simulators are quick with orders? Yeah, so that's a great one, because I definitely encourage you to trade a simulator before you put real money on the line. TD Ameritrade simulator isn't as fast as the type of trading you were just seeing. Really not even close. So you've got a couple different options. Interactive Brokers, I think, has a simulator, but I think you have to have an account there, so that would cost you some money to set up the account. You can sign up for paid simulators. They have a simulator. Sterling has simulators. Dash Trader has simulators, but you have to pay for the real-time market data. It's like 100 and some of them are $150, $175 a month. So they're not super cheap, which is kind of a pain. For what it's worth, for our pro members, we do include access to the Sterling simulator, which would cost you probably about $100 a month to subscribe to on your own. So that is included in your membership, but you could also go subscribe on your own if you prefer. How does your broker benefit from giving you margin? So your broker benefits from more shares that you trade, because some brokers will sell order flow. So the more shares of orders that are being sold, the more money they'll make. Brokers that are not selling order flow still get better negotiating ability by the amount of volume that their firm is trading. So it's to their incentive to let you trade more aggressively. So what exactly do I look for in level 2 beyond the big orders? I would say it's, so someone asked me this earlier about the spread. 1 cent spread is not necessarily a good thing. If you've got a really, really tight spread, then that's telling me that you've got a stock that is pretty thickly traded, might have a higher float, may not make as big of a move. So a spread of 3 to 5 cents or 5 to 10 is totally fine. That's not a big deal. I can look at the level 2 to see how stacked up the orders are, going down on the bid or up on the ask. And I can look at the tape. And the tape is what I look at probably the most closely, because I want to see, is this moving quickly? Is it moving up quickly? Are there a lot of orders going through in green? Because that means there's other people stepping up to the plate and buying this thing. And if there's other people buying and it's moving quickly, that's where I want to be buying too. So I don't use a cash account. I do use a margin account. In my retirement account, I don't have leverage, but it's still a margin account. So I can trade very aggressively if I'd like to. When trading my small account challenge, how's the psychology differ from when I'm trading with my normal account? So when I'm trading on a small account, I naturally feel more pressure, because I know that one mistake could blow up the account, right? So that means I'm going to be a little bit more cautious about my entries. I'm going to trade less. I'm going to focus on one trade a day. And I'm going to take as big of a position as I can on that trade, but I'm only going to take one trade a day, and I'm going to focus on the best quality setups. So by taking one trade a day, if I can afford to buy 1,000 shares of a $3 stock, that would be $3,000 in the trade. And it goes up 20 cents, that's a $200 winner. That's a great trade. If it goes up 30 cents, it's a $300 winner, that's 10%. One trade, in and out, that's it. And then do it again tomorrow. Rinse and repeat. One trade a day, rinse and repeat again and again and again until the account grows. And if I have a loss, I have a loss. Because I'm focusing on the best quality setups, my losses should be smaller in percentage. I'll have a higher accuracy, but it's not impossible. I could take a 20 or 30 cent loss and be down 300. So the account would be down 10% one day. But by continuing that strategy, as long as I'm maintaining 75 to 80% out of 10 trades with a 1-to-1 ratio, I'm going to be profitable. Anything over 50% is profitability in terms of accuracy. Let's see. So, beginner trader, you could certainly set up a cash account. They're easy to set up. You could set up a cash account with TD Ameritrade. You could trade half the balance every other day. But there's pressure on that also, that you just feel like you can only take one trade a day because of margin, because you'll run out of buying power, And then if you don't take it, then you feel like, oh man, I didn't take the one trade I should have. So I found trading with a cash account even more stressful than trading with a small margin account. What do I mean sell the ask and not the bid? So of course a market order is going to sell at the bid. It's just a marketable order to sell is at the bid. And it's going to be a red order that goes through on the tape. If you sell at the ask, you're putting an order at the ask and you have to wait for someone to buy the shares from you. And when they buy the shares, the transaction will be green on the tape, right? So if you're holding a position, my opinion is that I want to scale out slowly on the ask to get the best price. And because I'm still holding a core position, I don't want to hit the bid and have a red order go through, because that increases bearish sentiment. And I don't want to increase any bearish sentiment when I'm still holding a position. I want it to keep going up, right? So I just want to scale out slowly on the ask. So those who have more questions, what I encourage you to do is leave them down in the comments. I can come back through and answer them later today. I'll come back and continue answering questions, as always, that are posted on the YouTube channel. We always answer questions. So please feel free to leave questions. I'll be back at it first thing tomorrow morning for the live day trading morning show. So make sure you guys tune in for that. I'm happy to try to be as clear as possible. If I know some questions coming up, I can articulate very specific things relative to this video on entries and exits. I'll try to be extra mindful of that tomorrow. All right, so thank you so much for tuning in. I hope you've enjoyed this episode. This has been a little on the longer side, but I hope it's been beneficial. I hope you feel like you've learned a lot. I want to remind you, as always, that trading is risky. Most beginner traders lose money, and my results are not typical. So I encourage you to take it slow and trade in a simulator before you put real money on the line. Do yourself that favor. I didn't do it, and I wish I had. So really, take it slow. Trade in a simulator before you put real money on the line. And don't try to blindly follow me or anyone else. All right, thank you for tuning in. Thank you for hitting the thumbs up. We'll be doing some donations, so I'm excited about that, and I'll see you first thing tomorrow morning for the morning show.